Hey, Dan here at stockmarketmentor.com on Tuesday, October 20th. I want to look at Apple. I'll say some things that are probably going to piss some of you off. But first, I want to remind you that this coming Saturday, I'm teaching a workshop online called Technical Analysis for Non-Technicians, and it's free for members. If you're not a member, I strongly suggest that you sign up, enroll for a membership. It's free for 30 days, so you get your free trial. You get to attend the workshop. After the workshop, or even just after you sign up and then register for the workshop, go ahead and cancel your subscription to Stock Market Mentor so you haven't really paid for anything. Congratulations, you've hoodwinked me. You've found a hole in the system and been able to see the workshop for free. I like that. I'll tell you why. Because I think this is really good material that you need, that anybody needs. It's for new traders, for veteran traders. There's something in there for everybody. I know that because I'm the one that wrote the material, and I feel really strongly about that. So check it out. If you don't want to, that's fine. You can buy it anytime after next week, because we'll be putting it in the store, and you can buy it. We made a lot of money on the original one, and we plan on making a lot more. But we're giving you an opportunity to see it for free if you want. So anyway, let's look at Apple here. The company reports earnings when I think it's like next week on the 27th, a week from today, they report earnings. It wouldn't surprise me to see the stock go up just because it's already gone down quite a bit. But it was not lost on me. A couple things. First of all, Kevin O'Leary, Mr. Wonderful, who I think is great. I love that guy. He's been dogging on Apple Music, as I have in the past, only he has a bigger megaphone, for a while, because it basically sucks. And I know a lot of, I'm sure a lot of you people subscribe to Apple Music for like $10 a month or something like that. Guys like me, I've invested hundreds, actually like thousands of dollars over the years. I've given all that money to Tim Cook's predecessor. Now Tim even gets to use some to save the whales in some of the, non-profitable expenditures that Apple does, so, he can feel good about himself. But so I've done all that. I've invested in my music, and now I have a platform in Apple Music that I can't integrate that stuff into. It's a bear to use. I'm constantly being asked if I want to subscribe to Apple Music and give Tim another $10 a month. Memo to Tim, I don't. The point is, and by the way, I haven't bought any music in quite a while either, because it's just like, it's a different user experience. Why am I telling you this? I'm telling you this because I'm not the only guy out there. I'm not the only old fart out there who thinks Jay-Z has no talent. I'm not the only guy out there who doesn't really like hip-hop or rap or Miley Cyrus with the sticking out tongue. There's a lot of people that just want to listen to what they want to listen to. And I think this new thing by Apple is not working, and I also think a car is kind of jumping the shark a little bit. So that's just me. Now, we'll get to the chart, though, and it kind of bears out what I'm saying. The stock was in a volatility squeeze here. The path of least resistance, if you look at prior trading action, should have been higher. Even here, the stock drifted sideways. It drifted sideways here forever, like the market. And for crying out loud, it's Apple. You expect to see this thing go to 200. Carl, the tweet icon, has, I don't know if he still does, he might be secretly unloading his shares, but he has like a $210 or a $250 price target on it. Now, when you own like billions of dollars worth of stock, you're going to put a high price tag on it. But the point is, this is a stock that should have gone up, but it didn't. Not looking quite like this, but it's looking a little toppy. You look at the daily chart and you see 1, 2, 3 strikes, you're out at $135. Big downdraft here. Where are we now? Look, if I had to choose long or short, this will confuse you. I would go long. I'm looking at Apple and I'm seeing this is, on a fairly weak day in the Dow and the S&P. Other tech was down. Apple's up almost 2%. They report earnings in a week. This gives me the sense, and by the way, see now I don't even need to look at Apple. I'm just looking at this picture and knowing when the company that's creating this chart is reporting earnings, and it's in a week. I want to buy this stock. But I'll tell you this. If the stock, let's say it pops, if the stock pops up to 133, 134, 135 bucks, I want to short the snot out of this stock. It is not lost on me that Tim Cook did an interview. Where was it? With the LA Times, talking about how the Apple Watch sales for Apple Watch have accelerated. All these wonderful things are happening, but will he give any specifics, any details? No. So they're not particularly transparent, but he sounds like everything's great. Fine. I don't believe it. What I say is this. If the stock gaps up, if it starts trading up to 135 bucks, I take back what I said. I wouldn't short the snot out of the stock. Sorry for being so guttural. I would at least be taking profits, or I would not be buying the stock. But if the stock pops up to 135 bucks, if it's up here, if it comes up to this level, like let's say they report a blowout quarter and the stock gaps, if the stock starts trading down, this is all about risk management. If the stock starts trading down, then you short the stock, but only if you have a buy stop that's very tight, because the company has a boatload of cash, meaning the stock is actually pretty cheap. So and the stock trades at a discount to a lot of things. So if this stock starts moving to a new high, do not be shorting this stock. You don't necessarily have to buy it, but don't be short the stock. Just stand back and let it go. My bet, though, is if it does come up this high and starts rolling over, this is going to be a pretty good chart, a pretty good short, because I'm looking at this chart and I don't see too much to cheer about it other than maybe a short-term pre-earnings run. So hope that helps. And again, I totally encourage you to sign up for a free trial at Stock Market Mentor just to register for this webinar next Saturday. We are limited in our seats, and that may sound a little weird because it's an online thing. I'm not talking about our limitation. I'm talking about GoToWebinar's limitation. It's limited to 1,000 people at the time of the workshop, and trust me, we will have 1,000 because we've got many multiples of that as members, and a lot of them are planning on coming. So if you're not a member and you decide to register at the last minute, you're probably going to get the distinct honor of being one of the first to pay for it after it's on sale.